Hey, it's Dan Moralez, and this is Homebuyer Radio. This is episode, I believe, 139, and I wanted to talk about an email I received from a listener. So, first of all, if you have a question or you have something that you'd like me to cover as part of a podcast, I love it when you guys reach out to me, okay? It gives me an opportunity to answer a question that might be very specific to you, and ideally, it helps to hopefully help benefit somebody else who's a listener to the podcast as well, too. So this question came from Dallas, Texas, and there were two different parts to it, I kind of feel like. The first part had to do with, I'm thinking about buying a house, but I may not be looking to buy a house until sometime next year. Does it really make sense for me to start this process sooner, or should I maybe wait a little bit until I'm a little more ready to be looking at buying a house, maybe in the springtime here, okay? The second part of that question is, well, if I started this process earlier and there's a credit inquiry, or the bank does a credit pull on me, is that going to hurt me? Is that going to hurt my score? Does it have an impact on my final, ability to get a mortgage and so on? So that's kind of how I read the question. So if I got it wrong, I apologize. But I've been so busy lately, I might have breezed through it too quick. But I want to make sure I answer those two pieces because I think they're really good questions, and they're ones I get asked a lot. Okay, the first part is how soon should I start this process? If I'm thinking I'm going to buy a house, let's say sometime next year, should I really be starting this process, let's say a year, in advance, or is it something that I should be waiting to do until I'm a little bit closer to being ready? My answer is always going to be you should start this process as soon as you can. And the reason I say that is, let's just say you're going to buy a house, come a year from now. Why would you want to start now if you're not going to buy that house for a year? Well, the reason you want to start now is because you may not know the problems or challenges that you're facing to get loan approval, okay? And the reason I say that is because I have this a lot. I have a lot of clients who will start this process way too late in the game, and then they'll find out that there's 3 or 4 different hurdles that they have as part of the process of getting approved for a mortgage. They had no idea they had them, right? They didn't know that their income was going to be a problem, or how they're paid is a problem, or they didn't know that there was something on their credit report that they had no idea was on their credit report that was going to be a problem. They didn't know if their debt to income ratio was a problem. Because a lot of times people make these assumptions. I can get a credit card relatively easy. I went and bought a car with little to no problems. That's great when you're going to get a credit card, and it's great when you're going to get a car, but the mortgage lending process is very different than when you go buy a car or you get a credit card. It is much more thorough. It is much more detailed. We require way more documentation. It is a very different process, okay? You and I could likely go into a car dealership, buy a car without any proof of income, likely without any kind of down payment, and oftentimes with a debt, load that is higher than what you'd be able to do if you're buying, let's say, a house. So with all of that being said, you really need to start this process sooner, because so often there are so many little moving pieces and parts of the mortgage process that you may not know could potentially pose a problem for you as part of the process of getting approved. So it's important that you start this process earlier. Now, if you've got a ton of income, you're well qualified, or at least you think you're well qualified, all you're going to do is get validation that you're well qualified. You'll get an idea of kind of how much cash you need to have for down payment and closing cost, and kind of what a monthly payment would look like in today's world. Now, keep in mind, all of those things can change a little bit between now and the time that you actually buy a house, because you can have a change in interest rates. You can have a change in a number of different things that could potentially impact what your final monthly payment looks like. But at least you go into it with your eyes open and having a good understanding of what your financial commitment's going to be, what you're likely going to be able to qualify for, and being able to verify that you indeed do qualify as part of the mortgage process. So it's one of those things where, I always tell folks, it's really important that you start this process sooner, because you can get ahead of this stuff, right? So you can save yourself from any potential problems. You can save yourself from, going through and waiting too late into the process only to discover that, you have an issue with something that's on your credit report, you have an issue with debt to income, or you have an issue with, let's say, income that you can't count as part of the mortgage process. So start sooner rather than later. You're never going to get in trouble starting sooner, okay? Now, the second part of that is, well, what happens if there's a hard inquiry on my credit report? Is that going to cost me some points on my credit score? Depending on how far in advance you started to the point where you actually are ready to finish the home buying process, there's a high probability that you may need to have an updated credit report. Depending on that window of time, it may cost you a few points, but it's not likely anything that's going to cause you from being able to get approved. And in all honesty, depending on, what that window is, my guess is, because here's the challenge with credit scoring, guys. They don't publish like a book or any, hard guideline that says, a hard credit inquiry cost you 3 points or it cost you 4 points or something like that. There is a very complex algorithm that goes into a credit score. And so it's one of those things where if you start, let's say, a year in advance, maybe it costs you a point or two. No big deal, especially if you're well qualified for a mortgage. If you're somebody who is barely qualified for a mortgage and you're concerned about that, if you will, hard inquiry costing you a point or two, that's all the more reason that you need to start this process sooner, because if you're barely qualified, oftentimes there are a number of things that you can do to try to get yourself in a better position, to get your credit score raised and to kind of optimize what that number would look like. So, I always tell folks, to start this process earlier. It's not going to hurt you to start earlier. What can hurt you is if you wait too long and then you find out you have a whole, host of problems or challenges to being able to get approved. And then now all of a sudden you're like, oh gosh, what do I do? My lease is coming up, or I'm going to have to renew my lease, or I can't get a mortgage, or, it's just start this process early. Now, one other thing I want to talk about, okay, because I like to talk about stories and things that I have that happen on a day in, day out basis here in the office. So I recently took an application from a client. This is actually 2 days ago. This client had their house sold. Okay, so it's sold, under contract to be sold, and they're getting ready to start the process of buying a new house. Came in to get a pre-approval, and lo and behold, their credit score was significantly lower than what they thought it was, right? Because here's the problem is, a lot of times people see, a credit score on Credit Karma, or they see it on Credit Sesame or some type of free credit score tool. Okay, I can't tell you how many times, every mortgage lender is probably sick of giving this explanation to folks, but your Credit Karma score is not the same as your mortgage score, okay? Your Credit Sesame score, your Capital One score, your Discover Card score, your bank's identity program score, none of those scores matter, okay? They don't mean anything when it comes to getting a mortgage. The only score that matters is your mortgage credit score. Your mortgage credit score, 9 times out of 10, is probably going to be lower than the credit score you get from, Credit Karma, Credit Sesame, Capital One, whoever it is that's giving it to you. 9 times out of 10, they're giving you a different scoring model. That number is going to look different than the mortgage number that we get on our end, okay? I just had a client in the other day who was like, we pulled his credit report. It was 650 was his mortgage credit score. That client's, I think it was his bank that had an identity kind of credit score program, said, oh, hey, your credit score is up to 720. Oh, hey, my score's up to 720. No, it's not. Your score didn't move 70 points. Your score moved like 2 points because you paid one of your balances down, but it was nothing that was significant. So it's really important you start this process sooner. You understand what your mortgage, credit score is, and all of these moving pieces that make for a successful home buying process. The sooner you start this process, the better it is for you, because all of those pieces come together. One of those little pieces being off someplace can either cost you in the form of a higher interest rate, or it can cost you in the ability to be able to get approved. By going through and starting this process sooner, we can identify any potential areas where we could have a hiccup, if you will, okay? And if there's not any areas where you have a hiccup, you'll have validation that, okay, I'm good to go. I have a good idea of kind of what this picture is going to look like, so that when I'm ready to go through and start this home buying process, I'll have a good idea, of what my numbers should look like, okay? Now, the other thing would be, what if things change between now and the time that you go through and you're ready to buy? First of all, they're likely going to change. Okay, interest rates are likely going to change between now and, let's say, a year from now. But the nice part about that process, and I just had this experience with a client the other day, is that a client that we had approved back in 2017. It was the end of 2017. So we're pushing almost 2 years, since we've had this gentleman approved. The nice part is it only took me a couple minutes to update his information. I was able to put together some updated numbers for him, and then we're ready to go and make sure he's squared away once he's ready to write an offer. So the nice part is you've got a really nice head start in this process, which means you can move quicker and all those details can come together, if you will, that much faster. Hey, I'm Dan Moralez. I am America's Mortgage Man. You can find me online online at danmoralez.com, DANMORALEZ.com. My phone number is 616-931-4629. My NMLS number is 709-729. And, of course, Northpointe Bank is an equal housing lender. Now, hey, do me a favor. If you enjoy this podcast, right, there's a lot of you that listen. I get a lot of feedback from listeners, just thanking me for the content and the information that we put together. First of all, we do this because, I have a heart to educate folks out there, okay? This is, I believe, my 28th, 29th year doing this. You can tell I'm getting too old. But I have a heart to help educate home buyers. And obviously the other part of doing this is, if you're in the process or you're in the process of thinking about buying a house or refinancing a house, or you need a mortgage of some type, the best compliment you can give us is giving us an opportunity to serve you. That's really a big part of why we do this, in addition to, of course, educating people. We do lend in all 50 states. Now, granted, we don't have every product available in every of the 50 states, but most products are available in most of the 50 states. So we'd love to have the opportunity to serve you. You are going to get somebody who knows what they're doing, which is rare in our industry, trust me, and will actually get you across the finish line in the most ideal loan structure and kind of best way to do this, if you will, when it's all said and done. Okay. Hey, thanks for listening. Do me a favor. Make sure you share the podcast. If you've had value from it, please share it. Also, please write a review on iTunes. That helps others to know about the podcast and find us, and helps us to grow our audience, which in the end, I think ultimately benefits you as well, too. Hey, thanks for listening. Again, I'm Dan Moralez, America's Mortgage Man. Have a great day.